Let's go across now to the management at GE Shipping. It's a stock which has done well for the last few days. The management is now with us. Thank you so much, sir, for taking out time for us. Unlike the container and the dry bulk indices, tanker moves in the opposite direction with dirty tanker index increasing 25% week on week, which is one of the highest levels since 2019, maybe driven by Russian crude oil ban. Your strong numbers were supported by the tanker segment. Going forward, what is your outlook?
So outlook I'll give for the very short term and what is happening currently. Currently, tanker rates are even stronger, and especially you mentioned the dirty tanker index. So dirty tankers, the crude tankers, are much stronger than they were even in the last quarter. They are earning on average in excess of $50,000 a day for the crude tankers. So outlook is difficult to give because this is an outcome of disruptions, trade disruptions which have happened. We have the new EU embargo which is coming in from December, the 5th of December, on crude oil from Russia. We don't know how that will play out. It could be a very positive development or it could be a negative development. So that's why it's very difficult to say how it can play out. So tough to put an outlook. Suffice to say that this quarter looks strong because of how the tankers are doing.
There is a sharp decline in the spot container rates and container shipping will continue to weaken. You had plans to enter the container shipping segment. What are the plans?
No, it doesn't at all. In fact, we prefer to invest when markets are low. That's when you get sensible prices for investment with a good margin of safety. Therefore, we would rather have a weak market for investment. So I would say that in fact that market cycles we have to make them play in our favor. If they are weak, we will look to invest in those markets. So a weak market is not a concern to us. We are focused on the long term, not on the P&L of this quarter or next quarter.
So what would be your outlook on offshore market and rig pricing?
Rig prices have gone up, rig pricing. So rig asset prices also have gone up, but the day rates also have gone up very significantly. They've probably gone up between 60 and 100% within the last 12 months or so. There is a huge amount of demand coming in from the Middle East, essentially Saudi Arabia and Abu Dhabi, taking in a lot of jackup rigs because they want to increase their exploration and production activity. That has resulted in a lot of demand for rigs, and therefore it has reduced the oversupply. We had a lot of rigs which were idling. It has reduced the number of idling rigs significantly, and pricing has gone up a lot. We have not yet seen pricing in the Indian market where we are operating. Once that comes, we will get to know what has happened to the pricing in the Indian market. But I can tell you that in the Middle East market, where pricings happen all the time, pricing has gone up anywhere between 60 and 100%. That's the day rates. Values of the rigs have doubled, more than doubled from the lows that we saw 2 years ago.
Can you talk to us about what does the current order book to fleet ratio look like? Where will there be a supply overhang, if any, going ahead?
No, there is no supply overhang. That is one of the good things while looking at the outlook. The order book for crude and product tankers is between 4 and 5%. The order book for bulk carriers is about 7% or so, which are historically low numbers. These are the lowest numbers we have seen since we have records starting in 96. And this gives us a lot of hope because that supply overhang has been taken out. In offshore, of course, very few assets have been ordered in the last 5-6 years because of the market being so weak and there being so much oversupply. So it is not an issue. There are very few new rigs or vessels to join the fleet. In LPG, the order book is about 20%. So that's one where the order book is quite high. However, the trade growth is very high there. So let us see how that plays out. But in the other sectors, the order book is extremely low. In fact, the lowest we have seen in more than 25 years.
All right, Mr. Shivakumar, we leave it there. Thank you so much for joining us on ET Now to talk about the quarter gone by for your company and where do you see the company headed from here on. That was Mr. Shivakumar G, who is the CFO at G Shipping.